The latest reading on CEO confidence shows that the confidence of business leaders continues to deteriorate. The survey by the Conference Board, in collaboration with the Business Council, shows that CEO confidence plunged further in the third quarter, declining for the fifth straight quarter. An overwhelming majority of CEOs say they are preparing for a brief and shallow recession, though interestingly, three-quarters of CEOs say demand has risen or held steady just in the last 3 months. For details on the survey and much more, let's bring in Roger Ferguson. He's vice chairman at the Business Council and trustee at the Conference Board. He's also the former CEO of TIAA, former vice chairman of the Federal Reserve, and a CNBC contributor. And Roger, this is really interesting. We always watch consumer sentiment so closely because that can be a self-fulfilling prophecy. If consumers don't feel good, they don't spend, and therefore we wind up in a recession. How do business leaders and their confidence levels have any sort of impact on the economy as well?
Well, good morning, Becky. Thanks for having me. The answer to your question is that business leaders make a large number of very important decisions. We look particularly at their plans for hiring. We look at their plans for capital expenditure. And we also have questions involving inflation. And so they're telling us how they're seeing inflation as well. So it is important to watch these surveys. And when we see CEO confidence plunge to the levels that we're talking about now, around 34, anything below 50 indicates a slowdown either underway or coming. And so this is very, very important. It indicates that they're expecting a contraction. And so it is worth watching closely.
When they say they are expecting a contraction, they do think it's going to be shallow and brief, though. That may be the good news in all of this. If they're not planning for a big downturn, okay, maybe that's something to take a little heart in.
No, I agree. We asked them what they're expecting over the next 12 to 18 months. 81% of them said they were expecting a recession, though, as you say, brief and shallow without global implications. Only 7% said that they were not expecting a recession. That did leave slightly over 10, 12% who are expecting recession that maybe is a little more than brief and shallow and perhaps has global implications. But you're right. What they're saying is recession, but one that is brief and shallow, which one might say, given the talk out there, that may be some comfort to some people.
In terms of them seeing strong demand, if you've seen strong demand for the last 3 months and longer, what do they know that we don't? What do they see on the horizon that concerns them? Is this orders that are coming in or not coming in? Is this still concerns about the supply chain?
I think it's a little bit of everything. I think it's certainly a sense that things are still challenging. We see that in a couple of numbers. One is they're still seeing input costs that are rising and expected to stay high. That might be a reflection of supply chain uncertainties. They're still having some trouble filling some jobs. Importantly, only 50% of them expect to increase their labor force. That's down from 63%. So I think they're seeing that. And I think overall, knowing that interest rates are going to rise, they see future conditions in general weakening. So it's some supply chain questions, ongoing pricing pressures, and I think interest rate increases.
Yeah, the interest rate increases, what the Fed may do, may be the most important question that's kind of lingering out there in the minds of CEOs and the minds of investors. I mean, you're a former CEO, you're a former vice chairman at the Fed. How do you add all this up? Do you think the Fed is going to overshoot?
I think there's a risk of the Fed overshooting in the following sense. They got started relatively late. We see them moving in pretty large increments, debating 50 and 75 basis points. Importantly, the other thing that's happening, and the CEO survey indicates this, inflationary pressures, while maybe down ever so slightly, are a long way from the 2% goal and target they're talking about. The core PCE is well above 4.5. And so I think there's a real risk here. The Fed's going to have to tighten, and tighten to the point that the economy does sink into this mild recession that we're talking about in order to get inflation under control. So it's a very, very challenging for the Fed time, and I think the CEOs are seeing that and saying that.